In today's video, we're going to talk about predatory lending. And I want to tackle this issue because there's been recent executive orders that have been signed into place. And while everybody is out there saying that it's going to make it very easy for people to get loans, to be able to build their business, to be able to do things, yes, two things can be true at the same time, but it's also deregulated the financial restrictions that are on these financial institutions. And there were no restrictions on these financial institutions just for any reason. There were restrictions on these financial institutions because of what I'm going to talk about in this video with predatory type lending. Now, the executive order, and this is specifically what they're going to do in the Trump administration. So this is what they're going to do. You decide if it's good or bad. It says that the agenda is to have what's called a 10-to-1 plan. What does the 10-to-1 plan mean? It means that they're going to eliminate 10 regulations for every one that's implemented. So imagine that. For one that's implemented to help people, some of them may not help people. That's why I believe it's very confusing, and people will be like, oh, that's a good thing that they got rid of that regulation, but why would they get rid of this regulation, like the cap on what they can charge for fees and stuff, for late fees, when it doesn't charge them any money? And it's been researched and reported that having someone be late for a number of days does not cost the bank any money. Now, you need to have a late fee so you can get that account rectified, but with the research that has been done, it does nothing but hurt the individual. If you're trying to help a person who is financially strapped for whatever reason, and then you penalize them because one or two or a few individuals might abuse the system, this is the type of stuff that can happen. Because yes, there could be people who game the system. Yes, there could be people who open up accounts and don't pay and then just, have late fee after late fee. And they're trying to put that on there to stop people from doing that, from letting the account just sit there and be late. But there's other people who are financially strapped and they really do try to pay their bills and try to get things done, and they just don't have the money. And then you're going to stack on fee after fee after every day. You got first day you might have $25. Next day it's going to add on another $35, and then on the third day it's going to double or quadruple the fee. So all of a sudden you had a negative balance of, let's say, $45, and then in 3 days have a negative balance of a couple of $100. How does that help someone? Well, with these elimination of regulations, to get rid of 10 to allow one to stay, is this the type of world that we want to be in? Is this actually helping people? I think it actually makes it worse, and it actually sets up for people to fall into predatory lending, which is what we're going to be talking about in this video. See, predatory lending can only exist if the circumstances to get people into the status of being able to only want to go for those types of loans. And it's not that they only want to go for those type of loans. Those type of loans are brought to people who have tore up credit, who have bad credit because of whatever reason. These companies, if you really thought about it logically, does it even make sense for a company to give you a predatory loan when the reason why they're giving you a predatory loan is because you have problems paying your debts? Does it really make sense? So why is it something that is even a market, an industry? Why? Like, let's just ask that question. I'm asking you that question. Why? Well, we're going to talk about it in this video, because this could be a plan that is set up for you or a lot of people to make it very difficult for you to ever want to repair your credit. We saw with Rep. Clyburn's report in Congress where the bureaus were just throwing away the disputes. And then people get frustrated, and then they're like, oh, well, I don't even want to continue. I don't even want to do it. And then you end up getting put into that category of people who have to own, the only type of loans you get are predatory loans. And it's like they're doing you a favor, and you're the one that's paying the money back. They're using your credit, even though it's bad credit, to get approved for a predatory loan, which is a setup loan for failure. And then you have to pay the money back, but they're doing you a favor. They're doing you a favor. Before I get going on this, I have to share this story. This is my channel, and I talk about what I want to, and it might break the algorithm. I don't give a you know what. Because I'm real. I'm 100% real. I was looking at an executive order where they took away the nutritional program of free meals that they gave to kids. Some of those free meals were free breakfasts in the morning. And on the weekends, like the organizations like the YMCAs and certain church organizations, where they would give meals and they would get the money from the federal government. And it took me back to when I was probably 7, 8, 9 years old. I just know I was very young. And I remember going to my granny's house, and all of my cousins were there, like my mom's sisters and her one brother. They dropped all of the kids off every weekend. We went to my granny's house. So we were all there. And my granny just would let us just run crazy, do all type of stuff. And I remember down the street, there was this organization that had the free meals. And it was I think it was only on a Saturday. And all of us would go there, and it was just a small sandwich, either an apple, an orange, and a drink. And we would sit down with each other, and we would eat, and we would talk, and it was no fighting, it was just all the kids in the neighborhood, all the kids. And that was paid for by our government. And then I was thinking that's an investment in people. Because one of the first investments in doing that for me, I'll just speak for me. You see that sign there? I put my life on the line for this country. That's my payback. And let me tell you how much they paid me when I was in the military in 1988. I was getting paid $600 a month. $600 per month. And I was still in there. I was in there for 2 years. $600. So you invest in people, and then you get people that go and fight for this country, or put themselves in line to fight for this country. And then another thing that I thought about is I'm getting my taxes all taken care of right now. And I was talking to my wife, and I was like, this year for all of our businesses, we've paid about before we have to pay taxes on the money that we took, the income, just on the taxes period, was over $400,000. And then I think back to that meal. I wonder how much was that meal that they, for all of us kids. I don't remember how many kids it was, but how much was all of those meals every week? And I don't know, it was probably, I can only remember, might be a year or 2 years that existed. It meant a lot to us, and that's investing in people. And our government is supposed to invest in people because it circulates. It circulates with people that want to go and serve for this country because they want to represent the country. They want to fight for the country. It circulates for people who end up starting a business. I've been in business since 1990. Started my first company at the age of 21, and I still have that company also. All of the taxes that I've paid from that business and my other businesses. And I believe that that's been a great investment for the investments that the United States did for me. I see a lot of that stuff going away. I saw the free lunch stuff. To have that go away, I remember getting free breakfast at school, having the lunch tickets. I'm not the type of person, that's why I do this channel. And people some people say great comments. Some people make very negative comments. But I'm myself. I know myself. I know myself. So there's nothing that will break me that anybody will say. And I take a good compliment just like I take a bad compliment. Because I know myself. So let's get into this predatory. I just had to say that. Let's get into the predatory loan. So this is what a predatory loans is a lending practice that imposes unfair, deceptive, and abusive loan terms to people who are pretty much desperate to be able to get a loan, to be able to get either a vehicle or something that they need to do to be able to carry on their lifestyle, pay some bills. These loans often carry high fees, excessive interest rates, and rigid terms designed to benefit the lender, not the person who is borrowing the money. It targets people, and this gets to what they're doing with the executive order with the 10-to-1, is it targets people who have bad or limited credit. It targets people who are low income. It targets people who are elderly, immigrants, financially desperate. And it does it by luring people in by saying words like guaranteed approval, no credit check required, fast cash, little paperwork. Fast cash, little paperwork, because the paperwork they're going to get you to sign, it doesn't matter. You probably wouldn't even read it because they know that you're already in the first target vulnerability status person, which is either bad credit, limited credit, low income, elderly, immigrant, financially desperate, and may not understand complex loan terms. So it doesn't matter what paperwork they put in front of you. They put little paperwork because they don't want you to know anything. So they have a lot of hidden terms and fees. The true interest rate is usually a lot higher. There was a auto lender. I'm not even going to mention her name anymore because it's long gone from the class action lawsuit. But what they were doing is people were coming to me. This was years ago. They were like, Steve, I paid on my car for 5 damn years. 5 damn years. And guess what? I still owe what it had on the sticker price for the car. That's because the only way that can happen is because the actual true interest rate is a lot higher than what was advertised and what they signed for. As a matter of fact, with this company that was sued in a major class action lawsuit with 36 states, it showed that some of the car dealers were approving the loans and then giving different paperwork that had a higher interest rate to the company that was underwriting the loans. But if we have deregulation, take away the scrutiny of the applications, then what do we have? If we're going to take away 10 and only have 1, what are the 10 that we're going to take away? Are we going to take away the applications can be changed over? Are we going to take away that you can decide to raise the interest rate even though they signed for this interest rate because you believe that what the underwriter said that they would only approve, you got to change the documents? Or are you going to have the person sitting in the room and you're going to say, well, we had this interest rate for you, but now that we look at your credit, we have to do it at this one, and the person done invested everything that they got into a down payment, invested their time, invested their feelings, invested their emotion. They need the vehicle so they can get to work, have something dependable, and then they're going to turn it down? It's more than just somebody just coming in there wanting to just get a loan. There's always a whole bunch of backstories behind it. Other issues that come up is that they stick people in these types of loans, check this out, with prepayment penalties. So even if you work hard to pay it off early, they're going to stick you with a prepayment penalty so they can make more money from you who had the predatory loan that they already made more money on with the high interest rate. So are they going to take away that executive, is that executive 10-1 executive order going to take away that, deregulate that? Is it going to deregulate that? So now, even though you had bad credit, you went ahead and got the loan, you made all the payments, and you made an extra payment every year, let's just say every year, and you ended up paying it off a year early, and then they penalize you with a prepayment penalty. These are the facts. This is not stuff that I make up. These are the facts of what these loans have in them. I've read these loans. They are incredible. Crazy. I've seen loans from payday lenders that were 2,000% interest. 2,000. Can you imagine 2,000% interest on a loan? 2,000% interest. And it's legal. Balloon payments, making huge balloon payments. A lot of people in the 2008 real estate downturn were caught up in these balloon payments. What happened is they got the loans. The lender said, oh, you're going to be able to refinance in a year or 2 years. So we're going to just make this a balloon payment. Why do they even call it a balloon payment? Why do they? Have you ever thought about the play on words to say a balloon payment? As a kid, what do we think about balloons? My grandson just had a birthday a week ago, and guess what they were all doing? Blowing up balloons and giving them to me to blow up. Why do they call it a balloon payment? It's a play on words. Balloon gives you a psychological feeling of okay. But what it actually means is it's a balloon with a needle that's hanging over it with a 1, 2, 3, 4, 5 year parachute on it. And the closer it gets to that balloon, from the time that parachute is going to let go, it's going to pop that balloon, and the whole amount is going to be due. And if you can't qualify to get refinancing, which is what the majority of people ran into in the 2008 crash, they lost their house because they called the whole note due. They also did this to people with adjustable rate mortgages. Oh, get the adjustable rate mortgage right now. You know, do some stuff to get yourself in a better position, and then you can come back and refinance. And then most people couldn't do it because they know that most people are not going to do it. That's a predatory terms. They know most people will not do it. That's the thing. Mandatory add-ons like insurance and fees tacked on. Let me tell you a quick story about that. I found one of the customer that I always think about is the elderly lady that came to my office when I first started the credit repair shop. Her husband passed away. That he had bought a Cadillac before he was sick. He always dreamed of having a new Cadillac. Bought a new Cadillac. There's a reason why people do that. I'm not going to go into that. I know several people who were on, like, not their deathbed, but they knew that they were in poor health, and they went out there and made bad financial decisions. People say you can't take it with you, so what people want to do is they want to enjoy it with them right now, with whatever way that they can enjoy it. That's why people do that. I've even had that experience in a sense. Not with myself, but with a family member. So what they did is they tack on the insurances. Everybody's heard of gap insurance, but there's other insurances that they tack on for if you miss payments. And some of the times with these, if it's an in-house dealer or if it's a finance company, some of the times they get paid a large portion or all of the money that didn't get paid. And people didn't know that. So people were actually in these predatory loans. They were told they had to get the insurance. It sounded like a good idea if I run into a problem paying, which they ran into problems paying or other stuff. So it's logically make sense to them, because I had trouble paying other stuff. My credit is bad right now, so I'll just go ahead and get this add-on. And then when the people tried to use that add-on insurance, guess what? It didn't work. But what I found with the lady that I helped years ago was that she gave the Cadillac back when her husband died. It was probably only a few months old, and they sold it at auction. And then they came after her for the whole amount after what it sold at auction. And when I looked at the paperwork, I called them up for her. And I was like, we got to see how we can help her. What can we do? And I want to see, the auction statement. Car sold damn near for what was owed on the car. But they were coming after her for like $15,000. It was probably like a couple of thousand that was left, and I ended up cutting a deal on that. But I've seen with the insurances with people where the insurances had paid it, and then they sold the debt to a debt collector, and the debt collector came after the people for that debt that was paid off by that insurance. So are they going to take away with this 10-to-1 deregulation of the 10-to-1? Are they going to deregulate that to where they could sell the car at auction for more than for what they claim you owe? And just because you defaulted on a loan, they can go out there and just sell it to a debt collector and say, oh, it's $15,000, $20,000, $30,000. What are they going to be able to do with this deregulation? Because are they going to deregulate that they even have to transfer those documents over? Are they going to deregulate what the debt collector has to know to even prove the debt? What is this 10-to-1 deregulation going to mean? Some other things that you need to watch out for is that they'll do what's called flipping and churning. What they'll do is the borrowers are encouraged to refinance repeatedly each time with higher fees, more interest rates, less favorable terms. Higher fees, more interest rates, less favorable terms. So why would someone refinance with higher fees, more interest rate, less favorable terms? This is how they do it. This is why you gotta listen to me. You gotta make that decision that you're not gonna fall in these traps, and you gotta learn how to say no to these loans. I remember when I said no to the first one that my wife and I said no to was a car dealer. We said it's not a good deal, and this idiot got mad at us, and we stood up head high, walked out of there. But he was very upset. You're upset. It was our credit. It was going to be our money to pay the loan back, and you upset because you spent the time to give us some paperwork that had a BS terms and a BS amount for the vehicle and all of this stuff, and you get mad at us because we didn't take it. That's what I'm talking about. You got to be strong. You got to be strong. Reason why people fall for this, and you see this a lot with mortgages, and it makes sense, but it doesn't make sense. It makes sense for them, but it makes sense to you and me, but it doesn't make sense financially, and it makes a lot of money for them. What they want to do is they want to get you to refinance, so they'll say like, hey, the first gimmick is, do you got to pay some bills, refinance your house to pay some bills. When you do that, you securitize your house with any debts that you end up paying off, and you end up reset. So for example, I'll just make it easy for you. And people might not even believe that this is true, but it is true. I've been in this game a long time. If you pay off, let's just say you got a whole group of credit cards, and you pay off your credit cards with a home equity loan with those credit cards, because you have to actually let them know what you're going to pay off. And if you don't close out those accounts, you just secured your house with those cards. I know people are not going to believe it, but just find somebody that done ran into the problem. See, the thing is that we done had thousands of customers. And people then came to me and they said, hey, this is an unsecured debt. And I was like, what, did you ever refinance in a way that's like a debt consolidation? Because if you do that, you're putting that security on that loan. In a sense, that loan is your house. Like not the credit card company. You just secured the debt that you have with your house. And people don't understand it that way. All they understand is I'm going to have use some equity in my house. Payment might go up just a little bit, or maybe the payment go down. You never know. And all of a sudden, you're like, I'm never paying this damn house off. Because all they're doing is they're going to throw in like 5, 10, depending on what you're doing, the fee, and then they're putting the entry, the money that you're paying off the debt with into your house. This is like a cycle of debt. This is how people get in a cycle of debt. Never be able to pay nothing off because they're in a cycle of refinancing their debt. So, the key takeaways from this video, is, number one, you got to work on your credit. You got to work on your credit no matter how long it takes. You got to work on your credit. You got to start to educate yourself with how to use credit, what credit means, the different things that credit can do to help you and your family. You got to educate, and then you got to be willing to say no to stuff, because it's going to, when you get your credit repaired, you don't want to go back and fall into that situation. You got to figure out, manage your life through repairing your credit and stay away from predatory type loans. I'll just tell you what I did when our credit got tore up in 1994. My wife and I, we sat down, made a decision. We're not going to live that way anymore. I drove a beat up vehicle for 5 years. 5 years. No new car, no used car purchase. The van, this is no lie. Because with my advertising company, we used to deliver the free publications to all of the stores. My delivery van had a hole in it. I'm serious. This is a true story. Had a hole in it. Like, I got that van for like $1,000 because I needed it for delivering the, getting the publications from the printer up to the city, and it had a hole in it. And I remember driving that damn thing in the winter when it was below zero and my feet were freezing. Heat, let me tell you, the heat will not do any damage when you got a hole in the floor on the driver's side. Like, it was like a hole about this big, and it was letting all types of air in there. But I had to do what I had to do. And I know that you are doing what you have to do. But what we did is that we wasn't focused on repairing our credit. At that time, I should have focused on repairing the credit, because it took me a number of years after that to repair my credit. I didn't think about it that way. I was just like, let's just get out of debt. Let's just lower the debt or get out of debt. We ended up getting out of debt, but if I would have repaired my credit at the same time, had that forethought to say, okay, lower my debt. That's me doing my part, would be to lower my debt, to educate myself financially, to know that I'm not going to make those same mistakes again, and repair my credit so I can know that process of understanding the value of having good credit. I'm not saying that you got to repair your credit yourself. What I'm saying is that when your credit is getting fixed and you see how hard it is to fix the things that you've done to your credit. If it's not ID theft, it's stuff that you've done, the decisions you've made, and the decision I made when I tore up my credit. When I saw how much time it took to work that out, I made a decision that I would never fall back into that again. Just never fall back into that again. I never did. And my credit was in mid 400s or high 400s. That's where my credit was. To this day, I stand anywhere in 847. Sometimes it goes a little bit lower depending on what I use for my business credit cards. It could fluctuate, or if we use credit cards for going somewhere and then we pay it off at the end of the month. But we made that decision. So don't, I know it sounds easy for me to say, but I've been in your shoes. Don't allow yourself to be taken advantage of with these predatory loans. And I hope that you appreciated the information I gave you. If you need help with your credit, please visit us at creditrepairshop.com. Watch the video, What Makes a Difference, so you can see my 8-point validation process, my two-phase settlement process. If you need your credit reports and scores, go to the website, your3scores.com, to grab your Trades Union, Equifax, Experian credit reports, and all 3 scores. If you have debt collectors coming after you, grab my 3-pack of letters, or go to summonsmaster.com to get that exclusive debt validation letter, because that's what's going to stop them early. You don't want them going forward and starting to sue you. If you happen to be getting sued, go to summonsmaster.com, and you can see how we can help you respond to your debt collector court summons or original creditor court summons. It doesn't matter. Thank you for your time. Subscribe to the channel. This is Stephen A. Williams, president and founder of the creditrepairshop.com.